friends, and welcome to the CUInsight Network. My name is Robbie Young. I'm the Vice President of Strategic Growth here at CUInsight, and it's my job on this show to have conversations with thought leaders who support the credit union community. We'll identify issues affecting credit unions and discuss best practices that help us learn from one another and strengthen our credit unions. My guest on today's show is Jason Stverak, Chief Advocacy Officer at Defense Credit Union Council, and Elizabeth Eurgubian, Government Relations and Advocacy Consultant at Atlas Advocacy. Jason, Elizabeth, thanks so much for being here.
My pleasure.
Thanks for having us.
So, Elizabeth, I want to start with you. You work closely with regulators and lawmakers who may not fully understand the credit union difference. What are the biggest gaps you see in that understanding, and how can the industry better tell our story?
Yeah, that's a wonderful question. And I'll give you my perspective, both working with regulators on the outside as a lobbyist, but also based on my experience working at the NCUA as a director of the Office of External Affairs and Communications, where I worked during the Biden administration. Generally, I was happy to get that position and contribute as much as I could to the NCUA during my time there. And one thing I would tell folks in the industry when they would have meetings, with the NCUA and with other regulators was that we're good at policy. It's what the regulators do all day. It's what they concentrate on all day. But a lot of the very intricate and specific operational issues, if you're not in a credit union or a financial institution or a bank every day and seeing that and experiencing it, you just don't have the perspective and you just don't have that context. So I would always tell folks, who are meeting with the regulators, as many examples, like really specific operational examples, issues that you're facing and fact patterns to communicate to the agencies, as many of those as you could do, that is extremely helpful. I know a lot of trades and a lot of groups in the advocacy. We love the hyperbole. I love the hyperbole too. I do it all the time on my own. But the fact is, the more specific with the examples, the more concrete things you could say to illustrate an issue, the better the regulator is going to have at understanding that, because they're just not seeing those issues. They don't have that experience every day. I'll give one example. We worked on a rulemaking when I was at the NCUA regarding succession planning, and this seemed like just a no-brainer in terms of the provisions in it. There was nothing really like earth-shattering to me as we were looking at this rule. And there was a credit union CEO that met with Todd Harper at the time and brought up some contractual issue that they were concerned with based on the succession planning rulemaking. And I thought to myself, and I was in this meeting, I thought to myself, I never thought about that. Like, that is a really interesting issue that never occurred and was never discussed when this rulemaking was being thought out. And it was an issue that was very important. So then we went back and kind of looked at that issue based on what that CEO said. So that's why it's so important to bring those concrete issues. He didn't just come in and say, this rulemaking's terrible, reg burden, credit unions can't deal with the regs, we're going to go under. He didn't do that. He came in with, this is an issue we're facing with regards to contracts. He gave us the whole scenario. And we were able to really take a look at that and see what we could do with the rule to address it. So that's my 2 cents on that issue. Really, as many of the examples one could give to give context to the regulators, the better.
Yeah, I think that's worth way more than 2 cents, seemingly invaluable with that great example. What an actionable way to kind of make a change, especially from the credit union perspective. Thank you so much for that. Jason, you often emphasize the importance of ensuring all voices, large and small credit unions, are heard. How can credit unions be more assertive in advocating for quality legislation and regulation on Capitol Hill?
I think how they can be more assertive is that every credit union, whether they be our largest member, PenFed, to the smallest one, credit union across the country, is that every employee, whether they be C-suite to the teller, has a role in advocacy. Because when the final push comes for passing the bill in Washington, that really is the last stage. in terms of getting legislation done. When I was up on Capitol Hill, and what I've learned in my time here advocating for credit unions is that the importance of what credit unions do for their communities, how they treat the members in those communities, which are the voters for that member of Congress, cannot be understated. And it's kind of funny when we've been targeting members of Congress in terms of, to get their vote or, to get them to be supportive of a piece of legislation, it's to identify where they do business, where they shop for groceries. Is the local person a credit union member? Are they a member of a credit union? So it's that type of all-in advocacy that is so important to the future of the credit union movement, and that every credit union has to play a role. You cannot abdicate this and say, oh, somebody else is going to take care of it, because we can't. Members of Congress, their staff, more directly respond to people from their local communities. We used to have a kind of a unwritten rule up on the Hill that if you couldn't pronounce the names back home in some of the towns, you probably didn't understand the issues and how they impacted people. I come from rural America, so it's understanding what a 5 or a 10 or a 50 or $100 million credit union means for the economy in North Dakota, whether it's out in the oil field or in Fargo, is absolutely incredibly important. So that all of that goodwill, all of that local education, and all of that credit union commitment to their communities that you hopefully have been including the members and their local offices. We push our members back home is that we look at the congressional schedule and we say, okay, for the next 2 weeks, they're going to be home. Have you invited the member to stop on by to get an education on credit unions? Have you done work at a credit union for a day? Have the member of Congress stop on in. The more they understand what we and our members go through to ensure they are serving their communities, and for us in the defense credit union community, our active duty men and women is so incredibly important. So it's kind of a larger answer is that if you work at a credit union, you need to understand that in addition to being a great employee and going above and beyond, that customer service that you provide every day is advocacy, because you never know who you're touching. And we also tell our members that advocacy is every week. If there is a district office for your member of Congress or your U.S. Senator, we encourage our branch managers or the president and CEOs to schedule weekly meetings or monthly meetings and just, hey, what's going on in the community? Hey, did you know that we sponsored the local volleyball team? That stuff gets communicated up to Washington so that when you come in and ask and say, we need to expand our field of membership, and I know the banks are in here telling you it's bad, but you know what we do in our community. So that passing the legislation is the last step of the groundwork that you have done, every credit union has done, no matter the size, in the communities that they serve.
Wow. Well, hopefully both of you have some decent microphones, because we're only 2 questions in and you've dropped them at least once already. So you both have emphasized the importance of advocacy, whether that's educating regulators about the credit union difference or ensuring all credit unions have a voice on Capitol Hill. Building on your insights, what do you see as the single most impactful step credit unions can take right now to strengthen their influence and to drive meaningful change? Elizabeth, I would love to start with you.
Yeah. And, there's so many steps, but I'm going to kind of piggyback on what Jason said from the regulatory perspective. Really, it's just being as involved as humanly possible in the advocacy piece. And that's with the regulator side. That's with your trades, working with your trades as much as you can to really advocate. This isn't the time to kind of be passive. This environment is not suitable for that. It's really the time to put all of your eggs in the advocacy basket. I mean, the reason I think this is so important, we need to really emphasize it a lot, and I'm glad Jason did as well, is I'll talk to credit unions and folks in the industry, and sometimes like, well, we pay our trade association money. We're hoping we pay them dues. So we're hoping that this will lead to success, et cetera, et cetera. And I'll tell them, it's like, that's the same thing as me saying, I pay a gym membership and therefore I should look like $1 million, even though I never go to the gym. I still got to go to the gym. I still got to work out. I still got to be involved. I still got to do the stuff. I can't just pay for the gym membership and expect to look like $1 million. There's still a whole lot of me that has to go into this effort. And that's just, I can't say that enough for purposes of the advocacy. Now is the time to really be involved. And on the regulatory side, where it gets very helpful is providing the feedback to your trade associations. If there's something going on internally or with operations that's difficult, or you're having a difficult time with due to a regulatory issue, call up your trade association, tell them, look, this is an issue, put it in the next comment letter. We're always looking for things to put in the comment letters and things to communicate with the regulators. And because we're not in the credit union every day like the members are, we don't always have those things at our fingertips. So as much communication with your trade associations, use them as a tool, just like I use the gym as a tool. I still got to use the tool to get in shape. I can't just give the money to the gym. Same thing. Use your trade associations as a tool, consultants as a tool, your members as a tool. Everything is a tool. It's not a means to an end for purposes of advocacy. The second thing I would say, too, is we got to start really looking ahead and looking at what the world looks like 5, 10, 15 years from now. And things are going to be very, very different. And the skills that are valued are going to be very different. I'll give a little analogy here. I'm a middle-aged woman. My father was probably middle-aged when I was born. His father was middle-aged when he was born. So that's a long way of saying my grandfather, if he were alive today, would be like 130 or something. He was a World War I vet, very old guy. He used to tell my father when my father was a teenager, that he thought my father was going to be a total failure at providing for his family and his children because my dad didn't know how to kill a chicken and defeather it and prepare it for his family. He didn't know how to do that. And from my grandfather's perspective, that meant my dad was totally inept and wouldn't be able to provide for his family. Well, he didn't know that come later in the 80s and 70s, you could go and buy a chicken and cook him in the oven. You didn't need to kill it and defeather it yourself. You could, that process could be completed for you. Fast forward, my parents thought I was totally inept and was going to be a terrible parent, mother, whatever, because I didn't know how to take a chicken, the whole bird from the grocery store or turkey, and prepare it for my family. I didn't like handling animals that looked like it just grossed me out. I didn't want to deal with that. They're like, how are you ever going to be able to cook for your family? What the heck's going to happen to you? Fast forward, I go to Costco and I buy the rotisserie chicken. It's already done. I give it to my family. We have leftovers. We make broth out of the bones. I don't need to have that step of buying the whole bird and taking the stuff out and preparing it. That step's already been done for me. So this is a long way of saying the skills that were so necessary years ago are not, and even now, are not going to be the skills that are necessary in 5 years and 10 years. It's going to be different skills. And we have to start looking ahead and preparing for that. Instead of looking at how things are right now, I really encourage credit unions to start thinking what is going to be necessary for their operations in 5, 10, 15 years and start really delving into that and preparing for when those times become, because it's not going to be the same as today.
Jason, did you have anything you wanted to expand on that a bit?
A little bit. I think in terms of the best thing that we can do right now is to tell our story. And Elizabeth is 100% right. We as a trade association are an important tool to help get things passed. But the most important, the engine of advocacy comes from the individual credit union. Let us take the recent government shutdown as an example of where credit unions stood out. And now it's time to put the chips on the table and start advocating for the reforms that we want and what we need to be able to serve our members better. When the government shut down, when we started actually talking to our members in August about it, because you can kind of see these things happening. You can see the two cars, they're not slowing down. You're going to have an accident. So a lot of our members were prepped and ready to go, had already been informing, their members, many of them active duty service members and their families. Here's what we're going to be able to provide for you. In the hope, like in the past, it was a 1, 2, or 3 week shutdown. No one expected it to go this long, but credit unions were there from day one. And I can remember that first 2 weeks in October, I'm getting 20 calls a day from members of Congress's teams asking, what are you doing to help our constituents? What are you doing to help this people on this base? And we're like, here's everything that's being done. We were preparing briefing papers. We were telling the story of what credit unions do every single day. And for now, and it's known to members of the Banking and Financial Services Committee and the Armed Services Committees. But when you've got members from House Energy and Commerce or Transportation and Infrastructure who we never interact with, but they're like, can we help? Do you have information? We've got a base in our district where we have a lot of veterans. What's being done? And you can take an example of Keesler Federal Credit Union that when this started, made the commitment to, we're just going to pay you. We're going to, like what you were getting paid. If we don't get the money from the federal government, we're just going to put it in your account. So not a loan, just we were advancing them their salaries. That's incredible. And that was indicative of what was going on all across this country. And then you then see credit unions stepping up when SNAP benefits start to run out. And you have story after story locally about food banks going dry and members of the military lining up to get food because they're worried about, are they going to get paid next week? So you saw credit unions like Members First out in Pennsylvania making significant donations to every food bank in their area. You can take what Tinker Air Force Base did in Oklahoma and providing not only direct monetary support, but food drives to make sure that they were providing for the community. You can see that all across the country. And now is the time for us to tell members of Congress, their staff, members of the administration, look what credit unions did. This is why you should support us more. This is why you should give us expanded field of membership so more people can choose to be part of a credit union and receive these services when, God forbid, we have to go through this again, or there's a hurricane or a blizzard or a tornado. The first people that stand up are credit unions. And I'll toot the horn of the credit union. I didn't see a whole lot of stories about what banks were doing in the shutdown. I didn't see a lot of Chase Bank and Bank of America. I saw large credit unions and small credit unions and their teams and employees saying, I love my community. I care about my members. I'm going to make sure you don't go hungry. I'm going to make sure that you have the ability to pay your bills and keep the heat on and feed your families. It's that simple of an equation. So it goes back to, do not be afraid to tell people, I'm a proud member of a credit union, and this is what we do. And we have to encourage our members to make sure they're telling Congress that.
I second that horn toot. I think that that's such a valuable thing to remember. Jason, and recent legislation efforts like the Veterans Member Business Loan Act, those aim to strengthen credit unions' impact and support members' financial futures. Can you explain what VMBLA is and share why it's an important opportunity for credit unions and the communities they serve?
Yeah, happy to do that. I mean, we all know, if you're in the movement, we have a 12.5% cap on business loans, and 50,000 and below doesn't count towards it. It's 50 and above. And this is an attempt to allow credit unions, particularly defense-related credit unions, but all credit unions, the opportunity to reach out to those communities who chose to serve and defend our nation as they transition out or have a spouse who's trying to supplement their income while their family is, because it really is the entire family is serving, to be able to start a small business. I'll give you an example. I come from North Dakota and the oil fields out there now. And If you have someone transitioning a diesel mechanic out of Minot Air Force Base, highly qualified, could get a 6-figure job in the oil fields, no problem, just needs to buy a good truck to get out there because it's a little cold in the winter there, trust me. But, those are $80,000 to $100,000. And so either they go to their credit union that they've had a 10, 15, 20-year relationship with, and they say, hey, no, we're up against our cap, or hey, we don't give out the business loans because we don't want to deal with the headache of the paperwork that everything has to get filed out. Why don't you go across the street to the bank? That's unfair. It's wrong. These are the people that you've put your kids' college education funds with. They give you your first loan for a car, your home loan. And now we're saying, hey, we can't help you go across the street just because of a law. And we're seeing the impact of the fact that veterans are starting fewer businesses. They have a harder time in getting capital. And you have credit unions that are sitting on the sidelines with conservatively billions of dollars ready to go to invest in our veterans and our active duty men and women so that they can achieve the American dream. And let's be brutally honest. Most banks are not looking for business loans of less than $250,000 or even $100,000. So where is someone supposed to go where the spouse is one of the best cupcake makers in the state and they want to start a catering business? Go to the bank where you fill out a form and nobody knows your name and they never talk to you, or the credit union that you've had a long established relationship with. And this is an opportunity for us to continually give back and help those that want to continue to be productive in their communities. And the banks oppose it. They like the monopoly that they have, or the fact that this artificial barrier on competition that they get because of this cap. But I think it's time. And I think after this shutdown and the positive feelings that we just talked about, it is time to start demanding equality for credit unions all across the board. And this is that first step so that credit unions can go in and, as we kind of talk about it in the defense credit union, that the entire financial life cycle from the moment they enlist to 50 years later, we want to be there with you. We don't want to have to say, go somewhere else. We want to be your partner all throughout the financial decisions that you and your family make. So we're thankful. We have the legislation introduced. I think you're going to start to see probably more non-credit union associations, more veterans-related organizations start lobbying on this. And this is going to be a full court press for DCUC to keep moving that ball forward. And I cannot promise that it gets past this Congress, but we're going to get that ball further down the field and we're going to put it in the end zone soon.
Thank you for that, Jason. To wrap up, Elizabeth, what key changes or priorities do you anticipate from the NCUA next year? And what should credit unions really be watching for?
Yeah, that's a great question. As legislation was recently passed on the Genius Act, which will deal with how financial institutions and others can manage digital assets and stable coins, that's now in the regulators' hands to implement that act and get some regulations out. So I know the NCUA will be doing that for credit unions and working with the other regulators on interagency efforts. So I would ask that credit unions really pay attention to that. Stable coins, it's a developing area, and if credit unions could get involved in that, it would be very helpful in leading to faster payments. One of the things I think consumers are now starting to really pay attention to even more than in the past is speed. It used to be, speed, time is now the greatest commodity. And digital assets, stable coins, being involved in that will allow for faster payments, which is, very marketable. So if credit unions can be involved in that area, that's very helpful. The regulator can make it easy for them to do so. We're hoping for that. So, DCUC and others are going to be very involved in advocacy with the NCUA and the other regulators as they delve into proposing and finalizing rules to implement the Genius Act. That's going to be a very big issue coming next year, probably dominate the entire year. The other issue I would say is very important just is general regulatory relief. I know the NCUA is taking efforts to look at current regulations, current requirements, and seeing what is outdated, what is archaic, what can be changed and streamlined to make operations easier for credit unions and enable them to grow and have more members moving forward. So this is another area I would expect to see some activity, anything that could expand or take away certain regulatory burdens for credit unions. I'll be watching for that, and we'll be trying to get involved in how to help the NCUA in that regard. And then finally, I always tell credit unions, and especially now with cybersecurity and cyber threats, this area is becoming way more sophisticated, and cyber threats are becoming way more sophisticated and more difficult to spot from the consumer standpoint and from the financial services standpoint. I think everyone needs to pay even more attention to cybersecurity. I think credit unions need to pay even more attention to that because the threat has gotten so much worse. It was something that I worked on a lot when I was at the NCUA myself, and it kind of changed my viewpoint of how significant this issue is, especially during times of international conflict. That's when you usually see cyber threats increase in the United States. So I'll be watching for that as well and seeing how the regulators address those issues and what they can do to help credit unions be prepared and have their members be even more prepared and aware of these threats when they happen.
Jason, how would you expand on that from an advocacy standpoint, specifically for small credit unions?
I think the importance that small credit unions should not be afraid to make their voice heard. And I think that as a movement, and I've written a couple op-eds on this issue, is that there needs to be an understanding that we don't survive and thrive as an industry unless we have those small credit unions. For many of them, they've kind of provide a little bit of the homespun innovation. They are essential to the DNA of what we are as a movement. And I'd love to see where large credit unions provide partnerships for small credit unions. Are there a way to share resources so that, we've gone from, just in the last few years, 5,000 down to 4,300 plus credit unions. The industry is in consolidation. So we need to do whatever we can, both internally to make it so that small credit unions, de novo credit unions can thrive and grow so that 15, 20, 30 years from now, they are vibrant and serving their communities. And it's important, and I think Elizabeth talked about it, that as the NCUA is looking at regulations, find ways to make them smart and easier. That as part of our budget testimony, we testified that if you've got well-run credit unions, your Camel 1, Camel 2, then expand the time between exams. You talk to small credit union CEOs, when the exam comes in, I'm literally pulling people away from their jobs for a week or 2 weeks to be with them, to prepare, etc. So loans are not getting processed as fast. The members of the credit union are getting served as promptly. So the regulator needs to focus on, let's just talk about it. Use the resources that you have to focus on the problems. If you are coming in, and I really appreciated this from Chairman Hoffman, his comments at the hearing, that let's look at the list of what we require a credit union to submit an exam, something like that. Produce X document. Okay, why should this one specific credit union produce X document? There should be a justification so that they need only the information they need to ensure the safety and soundness of that institution moving forward. So I think that I would hope that would be another lever that can be pulled to help small credit unions thrive and grow. And I'm happy to see that many small credit unions CEOs are banding together and making their voices heard, because that's incredibly important. Because for no other reason, squeaky wheel gets the grease, and we need to make sure that we're listening to those CEOs and trying to provide both regulatory within the industry proposals moving forward. They have a path that they can survive and grow. Now, my hope is that when we, at the very least, I know Chairman Hauptman's term is up and we're waiting on the court case for the other two board members to see what will happen. But the new board, however it is compromised, kind of embraces that spirit of strong safety and soundness, but the flexibility to allow credit unions to serve their members and to trust them to serve their members.
Well, thank you both so much, Jason and Elizabeth, for being on the show. Stay well, and thanks to all of our listeners today for tuning in to the CUInsight Network. We'll be back again next time.